I like to, and you guys, I do that on purpose. I go a little bit wider on both sides, like Noah said. He likes a little bit of playroom there because I want to make sure it confirms on the entry and the exit. Yep. I don't want to get into it like advanced, but if it has a wide bid ask, you want to make sure the bid and the ask are above your trigger point. So when you add your nickel or your 10% of the ATR, you want to make sure the bid's above that too. So if there's 2 or 3 cents or even a nickel or a dime between the bid ask, why is that? Because the ask alone won't, because what do people do? People usually selling at the ask or buying. When you click on the ask, you know you're clicking on sellers when you're buying. And think about this. If there's a lot of people selling and you're getting filled right away on that breakout point, you want to make sure the people that are buying, which are the bids that you're looking at, and that's where you sell at, you want to make sure the bid's above there. Does that make sense? You want to make sure the bid ask, not the mark, not the ask, but the bid and the ask, the full price. So a lot of people go, gosh darn it, I keep getting triggered and I get stopped out. Yeah, you didn't put your trigger high enough. So give it a little wiggle room up here and the same on your stop. So that was a little bit of advanced stuff right there for you, you guys. That's a little bit of advanced stuff right there. So, you know, if you're an intermediate trader and you've never heard that before, you're welcome. So 34.10 and 33.20. Not at the close, Cindy, above the trigger point. So figure out your trigger point. Look at your bid ask. Make sure that's, you know. So if you have like a 5 cents between your bid and ask, add another nickel to it. And you're not going to see that a lot on stocks, but you're going to see that on options a lot. You got it. So 34.10. So check this out. I've got my trade ready. The only thing we're going to not get into this time is position sizing. Okay, we don't have enough time for that. But you should know your position size on 90 cents. Okay, because that's the difference between your entry and exit. I'm going to go to 34.10. Watch how easy this is with stock. Right click, buy. Now, what I do is I hit edit because I want to come in here and I want to make it trigger. First triggers a sequence, a stop. So here's my buy order. I right click on the green buy order and I create opposite order. That's going to be my stop loss. Here's my 34.10 and then down here is going to be what? 33.20. And by the way, guys, your stop loss is always good till canceled. So 34.10, my entry, 33.20. Now, when I confirm and send, read it out loud, especially if you're like me, I'm a ADD. I get easily distracted and I forget things quickly. So I like to read out loud, so I have to listen to myself. And it makes me remember better because I just told myself. So buy 100 at 34.10 to open. Sell 100, that's my stop loss. Oh, excuse me, that should be, oh, stop right there. See that? Stop, not limit. Stop trigger and stop loss. Confirm and send, and there it is. Does that show up on your screen, Noah? Can you see it?
It does. I can see the bracket order and a really badly skewed chart.
There we go. It's zoomed in for no reason. And then once you're on here, guys, once you're on here, you can do this. You can move it around wherever you want. You know.
Yep.
And so when you get filled on this one, watch what happens when you get filled on this one. You get filled on this one, it disappears. But then you might have to go put your stop back in there. Now, let me show you another way I really like to do this. For you beginners out there, if you're confused with limits and stops and all that stuff, you can buy, right? And what I do is this, market. And notice there's nothing in here. Notice there's nothing in here. Right? First trigger sequence. Create opposite order. And look at these, they're all markets. Check this out, all markets, right? I'll even go good till canceled on these. Why? And you can save this. You can save this right down here as a little template. I'm going to save this as my stock bracket. And we got this in our videos too, by the way, guys. There's a 3-part one. It's really advanced. Now check this out. This little sprocket over here makes life easy. So I just have a buy order here and a sell order. A buy at market and a sell at market. but this little sprocket on the green is my entry. When FE is at or above, what is that? 34.10.
Yep.
That's it. And you could even cancel this order in the week or so, whatever. But so when it's above, so see stop, limit, stop loss, all that stuff gets confusing. If it's above 34.10, get me in. And then down here in the red, this only goes in if the first one's triggered. If it's below 33.20. See, I like this better than stops and all that stuff because check it out. I got a market order to buy when it crosses what? 34.10. And a sell only if number one's triggered below 33.20. It's just so much easier. And you send it in, go check the chart, and there it is. Buy here, and here's your sell. Now, once this is triggered, this green will disappear, and you'll have the red one there.